Hi, I'm Matthew Malcolm with American Vineyard Magazine, reporting to you from the California Association of Wine Grape Growers Summer Conference at the Silverado Resort in Napa, California. Today, growers were able to hear from several speakers, including Mike Vizeth, a wine economist, who talked about the current status of the California wine industry from a global standpoint and what growers here can do to expand their markets.
I spoke today about the global elements of what I think you could say is a growing crisis for Central Valley growers. That in the U.S., the market for North Coast wines and higher, more expensive wines, and market for those grapes is continuing to grow, and the prices are good. But in the Central Valley, grape prices are less because the wines are not selling very well. American consumers are shifting back and forth. And the global markets could be part of could make this worse, could magnify the problem, or they could be part of the solution. And I tried to talk a little bit about both sides of it. Part of the solution would be if the United States were to be able to export our wines more effectively. And so I issued sort of a challenge for us to take our wine export programs more seriously. I talked about how I thought California punched below its weight. The rest of the world sees us as a market for their wines, not as a producer of wines that we could market there. And so I argued that the solution to that is to try to make strong investments. And in fact, Amy from Wente, in her remarks, said that they try. And so they sell a lot in Canada, for example, and that they're one of the top-selling American brands in Australia, of all places. And why is that? Because they try. Now, on the other side, and so if we were to try harder, I think we could sell more of our wines, more of our popularly priced wines that have such a good quality to price and value proposition to go with that. But on the other hand, there are events in the global economy that pose legitimate threats or concerns to Central Valley wine. And the most obvious one is the continuing exchange rate problem. The US dollar rising, foreign currencies falling, and that simply makes the bulk wine from especially southern hemisphere countries greater competition for the US. And I spoke especially about perhaps Australia, which has gone through its own crisis, and even today, after pulling up a lot of vines, there are some regions where it is said that 90% of the grapes produced are being sold below cost. So they desperately want to export wines, and because of a variety of things, including a meltdown in China, in the Chinese financial markets, the Australian dollar has fallen from over $1.05 US down to 90 cents to 80 cents to now 73 cents the last time I looked, which makes those wines ever so much more competitive. They're not as cheap as they were 20 years ago. When Yellowtail came in, it was 50 cents for an Australian dollar. So that, but it's still much more competitive. And if this replicates for other countries, which is what is happening, and if it persists and continues, then this creates real problems for Central Valley growers, because they now have to compete with what are, because of the financial markets, cheaper foreign competition from producers who are desperate to make a deal. And it's very difficult to compete with that. And so as much as I like to tell the positive story and not the negative story, I think that there are both of those. There are opportunities, and we have to seize them. And some of the discussion we had this morning in the conference and other speakers was about the need for leadership to seize this and build brand California. But in the short term, I think that growers need to be very concerned about the negatives that could affect their business.
Thank you, Mike. Learn more about the current state of the wine industry and other presentations from COG Summer Conference in the coming issue of American Vineyard Magazine. I'm Matthew Malcolm, CaliforniaAgNet.com.